most dangerous moment in trading isn't when you're losing money. It's when you're winning and your brain starts whispering that you're finally special. That whisper destroyed my account 3 times before I understood what was really happening. Every trader thinks they have a strategy problem or a risk management problem. But here's the truth nobody wants to admitting: you have a brain problem. Your Stone Age neural wiring is sabotaging every trade you make, and the profitable traders you admire aren't smarter than you. They've just learned to weaponize their psychology instead of becoming victims of it. What I'm about to show you will either transform how you think about trading forever, or you'll dismiss it and keep repeating the same costly mistakes that are slowly bleeding your account dry. The identity prison. Most traders think they have a money problem. They study charts for hours, practice strategies until their eyes bleed, and convince themselves that the next indicator will solve everything. But here's what nobody talks about: you don't have a trading problem. You have an identity problem. Every time you enter a position, you're not just risking capital, you're risking who you think you are. And once you understand how deep this identity trap goes, you'll never look at your trading the same way again. Watch what happens when you enter a trade. Immediately, you become emotionally invested in being right. The position isn't just numbers on a screen anymore. It's a reflection of your intelligence, your market reading ability, your worth as a trader. When the trade moves against you, your brain doesn't register, "Market moved in unexpected direction." It registers, "I was wrong about myself." This identity attachment transforms every loss from a business expense into an existential crisis. But the moment you realize how your ego has weaponized your account, everything starts to make terrifying sense. Your ego has weaponized your trading account. It whispers seductive lies when positions go bad. This is just a temporary pullback. Your analysis was correct. The market is just being irrational. Smart traders don't give up on good ideas. Meanwhile, your predetermined 100 stop loss becomes $300, then $800, then a margin call. You're not holding a losing trade. You're defending your self-image as someone who gets the markets. What happens next will show you exactly how destructive this psychological pattern becomes. The most dangerous part isn't the financial damage. It's how this identity crisis spreads through every aspect of your trading psychology. You start avoiding trades that might prove you wrong. You second-guess good setups because previous losses hurt your confidence. You develop elaborate analysis rituals to postpone the moment of truth. You're not trading markets anymore. You're trading your own psychological validation, and that's a game you can never win. But here's where it gets really twisted. This identity attachment explains why intelligent people make stupid trading decisions. A surgeon who makes life or death decisions with steady hands will hold a losing Forex position for weeks. An engineer who builds bridges that support millions of pounds will risk their entire account on a revenge trade. The same rational mind that excels in their profession becomes completely irrational when their trading identity is threatened. Intelligence doesn't protect you from psychological self-sabotage. Sometimes it makes it worse because smart people are better at rationalizing bad decisions. And what's happening inside your brain during these moments will shock you. The biological hijacking. Your nervous system doesn't distinguish between a charging rhino and a losing trade. Both trigger identical biochemical cascades designed to keep you alive. When your euro-dollar position drops 50 pips below your entry, your hypothalamic pituitary adrenal axis floods your bloodstream with cortisol and adrenaline. Your heart rate jumps from 70 to 120 beats per minute. Your breathing becomes shallow. Blood flow redirects from your prefrontal cortex to your limbs. You're biologically prepared to fight or run from a computer screen. But this is just the beginning of what stress does to your trading brain. The moment this stress response activates, your capacity for rational decision-making plummets, your working memory shrinks, your ability to process complex information degrades, time perception warps. You might stare at a losing position for 20 minutes feeling like hours have passed, or make 3 impulsive trades in 30 seconds that feel like slow motion. You're experiencing the same neurochemical state that helped humans survive predator attacks for millennia. Except now it's destroying your trading account instead of saving your life, and the long-term effects are even worse than you think. Cortisol doesn't just affect you during the trade. Elevated stress hormones impair memory consolidation, meaning you literally can't learn from your mistakes effectively. Your brain struggles to form clear memories of what went wrong or why certain decisions led to losses. This biological amnesia forces you to repeat the same psychological patterns repeatedly. You're trapped in a cycle where stress prevents learning, which leads to repeated mistakes, which creates more stress. But here's the part that will really mess with your head. Your sympathetic nervous system also amplifies every emotion. Small losses feel catastrophic. Minor wins feel euphoric. Neutral market conditions feel boring and frustrating. You're experiencing emotional volatility that matches the price charts, but this volatility exists inside your body, not in the markets. Your nervous system is turning trading into an extreme sport when it should be a business activity. The adrenaline addiction becomes part of the problem because calm, methodical trading feels boring compared to the biochemical rush of high-stakes gambling. What the pros do instead will completely change your perspective. Professional traders don't have superior emotional control. They have superior nervous system regulation. They've learned to recognize the early physical signs of stress activation before it hijacks their decision-making. They use breathing techniques, meditation, and systematic position sizing to keep their autonomic nervous system in parasympathetic mode. They treat nervous system management as seriously as they treat market analysis because they understand that optimal decision-making requires optimal biology. They've weaponized their physiology instead of becoming victims of it. But none of this matters until you see what happened to one legendary trader who lost everything and rebuilt from scratch. Systematic mastery. Paul Tudor Jones nearly destroyed his career in 1979 with a single cotton trade that cost him everything he'd built over 5 years. Not because he misread the fundamentals or ignored technical signals. He lost everything because he confused his identity with his position. When the trade moved against him, cutting the loss felt like admitting he was a failure as a trader, so he held, then averaged down, then borrowed money to average down more. By the time reality forced his hand, he'd lost more than his entire net worth. What happened next turned him into a legend. The psychological aftermath was worse than the financial damage. Jones spent months questioning whether he belonged in trading at all. His confidence was shattered. His risk appetite disappeared. He'd wake up in cold sweats replaying the decisions that led to his destruction. But instead of quitting, Jones made a decision that would define his career. He would rebuild himself as a trader who could never be destroyed by his own psychology again. He would create systems that made emotional decisions impossible. The method he developed is still used by elite traders today. Jones began studying his own psychological patterns with scientific rigor. He recorded every trade decision and the emotional state that preceded it. He identified specific physical sensations that preceded his worst decisions. Tight shoulders before revenge trades, shallow breathing before position sizing errors, sweaty palms before holding losers too long. He learned to read his own body like a market indicator and built response protocols for each signal. But the real breakthrough came when he discovered something that changed everything. The breakthrough came when Jones realized he needed to remove his ego from the equation entirely. He developed position sizing formulas that made individual trades emotionally meaningless. He created exit rules that triggered automatically based on price, not feelings. He hired other traders to execute his strategies so his emotions couldn't interfere with the plan. He measured success by process adherence, not profit and loss. Every trade became data collection rather than validation seeking, and here's the result that will blow your mind. Most importantly, Jones discovered that consistency beats brilliance in trading. His new approach generated smaller individual wins, but eliminated the catastrophic losses that had previously destroyed him. He stopped trying to be right about market direction and started focusing on being right about risk management. His identity shifted from market predictor to risk manager. This psychological transformation turned him into one of the most successful traders in history, managing billions while maintaining the disciplined mindset he built from his earlier destruction. But if you think this is just about famous traders, you're missing the point entirely.